Okay, let's dive into the story of WeWork. It's got to be one of the most dramatic and, honestly, cautionary tales of the whole modern startup era.
I mean, how does a company that was once valued higher than Ford just go bankrupt? It's a question that really baffled Wall Street. And the answer? Well, it's all in the incredible journey of a company that promised to change not just how we work, but the world itself.
So, it all kicked off back in 2010. You've got this super charismatic guy, Adam Neumann, and his partner, Miguel McKelvey. They had a really simple but, man, a powerful idea. They looked around, saw all these freelancers and startups popping up, and thought, hey, we can build a whole new kind of workspace just for them.
And here's the thing. Their vision was way bigger than just renting out desks. No, they were selling an experience. They even called it a physical social network. The whole idea was to create these vibrant, cool, communal spaces where startups, freelancers, creative types could all hang out, collaborate, network, and really feel like they were part of something big.
And wow, did that idea catch fire? I mean, from their very first spot in Manhattan, the company just grew at this absolutely breakneck pace. And it wasn't just the little guys, the small startups signing up. By 2011, you had giants like PepsiCo using WeWork as like a startup incubator. And by 2014, get this, they were leasing more new office space in New York City than anybody.
And then the rocket fuel arrived. And I'm not talking about just any old venture capital. This was a torrent of cash, mostly from SoftBank's Vision Fund. They weren't betting on a real estate company. Nope. They were betting on the next world-changing tech giant. This was the absolute peak of that growth at all costs mindset, where you could get a massive check written based on vision alone.
And this is what all that hype was about. You're looking at the product itself. These beautifully designed, super energetic spaces, with the kombucha on tap and this just infectious buzz in the air. This whole vibe, this aesthetic, was absolutely central to the brand, and it was the key to their crazy fast global expansion.
So, by 2017, after a huge investment from SoftBank, the company's valuation just skyrocketed to $20 billion. Let's put that in perspective for a second. WeWork was suddenly worth more than these huge, established giants in totally different industries. It was wild.
But wait, it gets crazier. The climb wasn't even close to being over. Just 2 years later, it more than doubled, hitting a peak valuation of $47 billion. This was in early 2019. At that moment, WeWork was, hands down, one of the most valuable private companies on the entire planet.
So, all in all, investors, mostly led by SoftBank, poured almost $13 billion into this company. All of it was to fuel this meteoric growth. The message from all that cash was crystal clear. Just grow at all costs. Don't worry about profit, that can wait.
Okay, so with what seemed like an endless supply of cash, the vision just blew up way beyond offices. The company actually rebranded to the We Company, and they started buying, well, everything. We Live co-living spaces. We Grow a private school. They bought Meetup. And then, and this is my favorite, they even bought a company that makes artificial waves for surfing. I mean, why not, right?
But here's the catch. Behind all that explosive growth and the insane valuation, the company was just burning through cash at an unbelievable rate. In just 1 year, 2018, it lost over $2 billion. But, as long as that private money kept pouring in, the party just kept on going.
And then, in 2019, the music stopped. The company decided it was time to go public, to have an IPO. And what that means is you have to open up your financial books for the whole world to see, for the very first time. No more hiding.
And this one document, it's called the S-1 filing, that was the turning point. This is the moment where that carefully crafted story of a revolutionary tech company just smashed head-on into the cold, hard reality of its actual business. And the disconnect, it was just staggering. The pitch was, we're a scalable tech company. The reality? They were a real estate company with massive, long-term leases, like $47 billion in future lease obligations. And the filing also exposed some really serious conflicts of interest, like the company paying Adam Neumann almost $6 million just for the rights to the name We. Plus, the whole governance structure basically gave him absolute, total control. The reaction from Wall Street, from the media, it was immediate, and it was brutal. The IPO didn't just fail. It triggered one of the fastest, most stunning corporate freefalls I think we've seen in recent memory. It was just a complete implosion. I mean, just look at how fast this all went down. August 14th, they filed to go public. Just over a month later, the IPO is dead, it's pulled. 1 week after that, the founder and CEO Adam Neumann is forced out, and by November, thousands of employees are out of a job. The whole thing collapsed in 48 days. Just gone.
And this is where the story gets really tough to swallow. You have this stark contrast. On one hand, you have thousands of employees who are now unemployed. On the other hand, Adam Neumann walks away with an exit package reportedly worth nearly $1.7 billion. As you can imagine, that deal sparked a lot of outrage.
So WeWork's biggest investor, SoftBank, had to step in just to keep the lights on, to save the company from completely failing right then and there. And in doing that, they had to write down their own investment by over $9 billion. That's basically a public, very painful admission of just how badly they had misjudged this whole thing. So where do you go from there? What happened next? Well, the company had to fight for its very survival. And this next chapter of the story, wow, it would take them through a global pandemic, another shot at going public, and then, finally, a necessary trip to bankruptcy court. Yeah, that road back was really turbulent. In 2021, WeWork did finally go public, but they did it through something called a SPAC merger, which is kind of like a backdoor IPO. But look at the valuation, $9 billion. I mean, that's just a tiny fraction of its old peak. And even going public didn't fix the underlying money problems. So by late 2023, they had to file for Chapter 11 bankruptcy, which is basically a legal way to hit the reset button and restructure all that massive debt.
So the company that came out of bankruptcy just recently in May of 2024, it looks totally different. It has a completely new ownership structure. The new boss, the majority owner, is a company called Yardi Systems. They're a real estate software provider. SoftBank is still around with a small piece, but the old guard, yeah, they are officially no longer running the show.
And what that bankruptcy ultimately did was it allowed WeWork to become a much smaller, leaner company. It got rid of $4 billion in debt, it tore up hundreds of bad, unprofitable leases, and it shrank its global footprint down to a core that's way more manageable and maybe, just maybe, profitable. The mission is no longer, let's take over the world. It's about survival. It's about stability.
Which really leaves us with the big final question, right? The crazy spending, the cult of personality around the founder, the talk about elevating the world's consciousness, all of that is gone. It's in the past. So after one of the most spectacular rises and truly spectacular falls in modern business history, can this new, leaner, humbler WeWork finally build a lasting, sustainable business on what was, at its heart, a really powerful idea?